Good afternoon, everyone. I'm Blake with Beaudry Hometown Insurance, and today I wanted to talk about what's going on in the mortgage industry. So I brought my trusted professional, Jeff LaBarre. We've all been hearing, the market is crazy, it's a seller's market. Can you tell people what that really means to them if they're looking at buying, or things that, they might be impacted if they're considering applying for a loan?
Yeah, there's three things. So we've got high prices, we've got low inventory, and we've got high interest rates. So that's kind of what we're seeing right now in Minnesota. Spring market is here, so it's busy, a lot of buyers, but they got those three issues they're running into. So I do have a way to combat high rates.
We've kind of gotten used to those around that 3 to 4% range. And now what are the rates today for a typical loan right now?
So I'd say a 30-year fix today, you're looking at probably 7.25.
7.25.
7.25.
Okay. Obviously things like credit score is affected. What other things could be taken into account to get a rate?
So debt to income ratio, type of program you're in, you can get a better rate if you're in a conventional program versus a government program. So it kind of just depends on, program. And we have credit score, debt to income, that kind of all encompasses everything.
If I'm a first-time home buyer and I'm looking at home prices, they're through the roof and I don't even have close to 20%. What are some things I can do?
Okay, so I do have a program. It is kind of like a first-time home buyer program. So it's through a program called Minnesota Housing and Finance. So basically what you can do is you can get up to $18,000 to cover your down payment and closing costs. So there's a couple different versions of that program, but the max is $18,000 you can get.
Okay.
So you don't need 20% down. Basically, to get into the program, you need $1,000 of your own money, credit score over 660, and take up a margin education course to access that money.
Jeff, now for everybody else though, what are some short-term things that they can do?
People ask me, is there any ways we can buy our rate down or pay points? Every rate right now costs money. So it doesn't matter if you have great credit, you're still going to get a high rate. It's probably going to cost you a little bit of money, a little bit of points. So what the investors are doing, the investors are going to give us rates. So they know people are going to refinance, in a year or two when rates drop. So they want to hit you up front with that cost. So that's not a good way to do it. The way that I have, it's called a 2-1 buy down. So what that means is if you're a buyer and you're pre-approved, let's say your rate is 7% on the 30-year fix, you're pre-approved, you're shopping with your agent, you write an offer on a house. You can ask that seller to cover your 2-1 buy down. So what that means is for your first year, your rate's 5%. For year 2, your rate's 6%. Years 3 through 30, your interest rate is that 7%. So the idea behind it is you get a break for the first couple of years. Rates will hopefully drop, refinance before that 7% rate kicks in.
Would somebody have to wait the whole 2 years before they could do a refinance in that situation?
No, typically I say, you refinance after about 6, 7 months.
7 months. Okay. Any other tips, Jeff, for somebody that doesn't understand the whole market? Where should they start? I mean, if they just I don't even know what I could qualify for. Who should they talk to, or where should they first start?
So you should talk to me first. So what I do is I like to set you up to win, basically, and I like to be transparent and go over everything. So you come to me, you have no knowledge of what to get into, or what a pre-approval is, or what mortgage is, or what all that stuff is. I'm going to break down everything for you. So we're going to sit down, go over everything. I'm going to collect all your documents to make sure that you qualify, I know you qualify. When you're out there shopping with your realtor, they know you're qualified.
Yeah. And
then you're prepared for your payment on a house. You're prepared for your rate, your payment, all that stuff. So it's really important to come and talk to a professional like me before you start looking at houses.
Okay, that's great advice. I want a tattoo. Now let's look at it around here. I got nothing. I got a blank canvas. You don't.
Great.
All right. So give me one piece of advice for me, outside the home buying process of what I can get a tattoo.
So I would say start off small and start with an area that's not that painful. Something you like, try it out. Up here, don't get on your wrist, don't get on your elbows.
Something you can cover up if you don't love it.
Something you can cover up, but you'll like it.
Sure.
So I'd say start out there, see what the pain is first, and then go from there.
Perfect.
That's what I would recommend.
All right, you guys. Well, I appreciate Jeff. Thanks a lot for being a part of this.
Thank you.
If any of you guys have more of your mortgage questions or are looking at buying a house, definitely reach out to Jeff. We'll give you his contact information below. And let us know what other questions you have too. We'll be happy to, if you don't want to ask him yourself, send us that information. We can get in contact with Jeff and bring you guys more tips like that. Again, thanks a lot, Jeff.
Thank you.